Hey everybody, welcome to our February market update. Craig, talk to us a little. I know we were talking off air a little bit. Talk to us a little bit about what's going on in the market.
Yeah, let's talk about what's going on in MLS. Right now we have 19,554 active listings in the MLS. That is actually up from last month a little bit, but breaking that down into Maricopa County, single family homes, condos, townhomes, we have 9,324 active listings. That number is kind of staying about the same the last few months. Not a lot of changes there. Still historically low inventory for the valley.
Remind everyone what like a normal supply is generally.
Like right now, we're 19,000. It really goes on absorption rates, right? Like we should really be, seeing like in the high 20s, 30s, 35,000 list. We're way low on our listing inventory. And so if you look at it, it's very much still a seller's market based on the fact that we have no inventory.
Yeah.
Right. Or low inventory, I should say. We actually have inventory, but it's low inventory, right? But one of the interesting stats I saw when I pulled up what's going on month over month, if you look at sales per month, last month we had 3,932 sales in the MLS. This month we have 5,354. So definitely a significant increase in sales occurring. Obviously we're in our season. It's February. It's beautiful. This is when homes really, we're kind of entering our spring selling season. So not unexpected. And a little over last year's into February of 2023, we had 5,293. So the number is actually up a bit over last year's numbers.
That's good. And you can kind of see a bit more traction than we saw last year.
Absolutely.
Because rates, if we remember, we've seen such crazy spikes and dips in rates. But towards the end of 2022, that's when rates really started to go up, and then very stagnant in 2023. At this time, I think right now we're starting to see a little bit more movement in the market. Is that kind of what you're?
Absolutely, and I think people, we've been in this rate. We were just talking prior to filming this morning that we've been in this for a while now, right? March of 2022.
Yeah.
Right. So it's almost 2 years we've been in this higher rate environment, coming out of that extremely low rate environment. And I think, 2 years into this, people who have been wanting to make a move, and we all, life does happen. Sometimes you absolutely have to make a move. So I think that's what we're seeing. We're seeing people that held off for a while, but, certain things are going on in life where you have to make that move and put your home on the market or buy a home. You're having children, you need a bigger place. So we're seeing a lot of that right now. Right?
Yeah, no, I think so.
And so that's kind of the overall big picture of what's happening on the the sales front right now. Definitely, like you said, more traction out there. What are you seeing on the finance side?
So it's been an interesting, I would say, last 2 to 3 weeks. We got a CPI report. So obviously, as we talk about, the favorite measure of inflation is PCE. CPI actually came out, I think it was last week, and we were expecting a drop from 3.4%. The market, or Wall Street, was expecting a 2.9%, which is a substantial drop in inflation. We ended up landing at 3.1%, so we didn't quite hit the mark of that 2.9%. Market completely overreacted. So even though inflation continues to come down, market jumped and rates we saw spike again. So we were back in the low sevens, and we were in the sixes. We were trending in a great direction because we had some really solid jobs data, not necessarily increasing jobs, which is good for us on the mortgage side. We saw some really good trending data for us to see a continued drop in interest rates. That just wasn't the case with the CPI report. And again, I think it is an overreaction, and I think that the trend in inflation continues to come down.
Right.
And that's what the Fed's eyeing when they're looking at lowering rates. And projections are coming out right now, and the biggest, I guess, percentage of when people are anticipating the Fed to lower rates is now in June. It was a potential for March. It was a potential for May. Now we're kind of targeting that June timeline just because of the overreaction that I think happened in the CPI report last week.
Right. Agreed. And I think, looking at the market overall, when rates do start coming back down, we saw so much activity in the market when they were kind of trending to the lower sixes. The market's just going to take off, right? We see this historical low inventory. It's going to the market's going to react very quickly.
Yeah.
And people are going to jump in.
I mean, you were saying, we saw it when rates got down to the mid sixes.
Right.
And it's all over the media. As soon as that starts happening, you see all these buyers come out of the woodwork, even sellers that have been waiting for a good opportunity to sell their home. I think that's going to probably continue, but it's not going to be, we're going to see these ups and downs in mortgage rates. It's not going to be just a straight downward shot, which a lot of the experts are saying, but it gets a little bit kind of like Groundhog Day, as we were talking about off air. It's like, when is this actually going to happen? And it's hard to predict, but the overall trend in inflation's down. I think that we're still anticipating rates to come down towards middle of this year.
Exactly. Yep.
Well, I think that about wraps up what we wanted to chat about. If you have any questions on what's going on in the market, give us a shout.
Yep. Thank you.